Good morning and welcome to Market Cafe. You're on ET now with me, Lisa Fernandez, and with me I have Snehi. Snehi, very good morning to you. And during the course of the next 1 hour, we take you through what's the action that happened both on the international as well as the domestic front. But first on the international market, Snehi, we have started a new month. It's December. December is known for its Santa Claus rally. But how the last month transpired?
Well, good morning to you, Lisa. Very good morning to all our viewers. And December is only my favorite month, Lisa, and happens to be, it's looking positive for the markets as well globally. So let's start by taking a look at what Wall Street did yesterday as well as in the month that went by. Now, stock futures fell slightly in overnight trading after the Dow Jones Industrial Average notched a new 2023 high and capped off its best month in more than a year. Thursday's overnight moves come on the heels of an exhilarating end to a blowout November rally. Now, the Dow Jones Industrial Average surged 520 points intraday, or 1.47%, almost 1.5%, and topped its previous 2023 high, which it hit in August. The S&P 500 as well rose almost 0.5%. Nasdaq slipped about 0.2% when it comes to the intraday trading session. Now, stocks finished off a record November during Thursday's session and snapped a 3-month losing streak as well. S&P and Nasdaq rallied almost 9% and 10.7% each to notch their best monthly performances since July 2022. The Dow surged 8.8% for its best month since October 2022. Now, both the Dow and S&P are also headed for a winning week, with the Dow on pace to hit a 5th consecutive winning week for the first time in more than 2 years. Nasdaq, however, is down about 0.2% week to date and is slated to snap a 4-week winning streak on the other hand. Despite Thursday's big market win and November's upbeat market sentiment, some on Wall Street are advising that investors have to remain cautious into the year end and into 2024 as well. So, this is what the US markets looked like intraday on a weekly as well as the monthly basis. Now, let's talk about US bonds, because US Treasury yields gained slightly on Thursday but ended November far below high levels that it reached last month. Remember, the 10-year Treasury yield rose nearly 7 bips to 4.34% after having fallen below 4.3% for the first time since September earlier on Wednesday. Keep in mind that the yield rose above 5% at one point in October, so might have ticked a little bit yesterday, but on a monthly basis, it's a major cool-off coming in for the US 10-year bond as well. Shifting focus to European markets then. European markets closed higher on Thursday, rounding off a bumper month as investors assessed Eurozone inflation data that suggests that pressure from the rising prices are easing. Now, the regional stock 600 index closed up 0.5% at a 10-week high. It also takes the gains for this index to 5.8% for the month of November, its best performance since January, and a sharp reversal from 3 consecutive monthly losses. All in all, European markets closed higher on Thursday, and investors assess Eurozone inflation data suggesting that pressures from rising prices are easing as well. Eurozone inflation came in at 2.4% on an annualized basis in November, according to preliminary data that we're getting from Eurostat. It is lower than what was expected. 2.7% was penciled in by analysts, this is compared to October's reading of 2.9%. So, all along, good handover coming in from the US as well as Europe, Lisa. We can only hope for a good trading day for our markets this morning.
Yes, and it's like everything is cooling off. The inflation is cooling off. The bonds are cooling off, and even the weather is also cooling off. So a lot of action was seen on the US market as well as European market. A lot of action in the crude market as well, because the OPEC meet, which was supposed to be held way back in November 26th, that's finally happened. So the all-awaited OPEC Plus outcome is here. The organization, they have gone ahead and they have opted against formally deepening the production cuts. However, Saudi Arabia, that has extended its 1 million barrels per day cut into the first quarter, and Russia too has announced a 5 lakh barrel per day cut. Voluntary cuts followed Saudi's announcement from the likes of Iraq, UAE as well as Algeria. So if I look at the oil prices now, it actually boosted this OPEC meet, the voluntary cuts, that actually boosted the oil prices, but that was the initial gains that were seen, but then all that got erased and now it's trading in the red, and oil prices, WTI, that is at around $75 per barrel. But now keeping it up with the updates from the OPEC Plus meet, Brazil will also now be a part of the OPEC Plus coalition. And however, there is no clarity if the country will immediately have powers to carry out any production cuts next year, Snehi. But what are the other events to watch out for?
Absolutely, Lisa. Lots to watch out for today. It might be a Friday, but well, one more day of trade is still left ahead of us. So let me take you through a list of all the important cues that you need to be keeping on your radar. And when it comes to data, then you've got a whole host of countries that are going to be releasing their Purchasing Managers Index or PMI data today. The likes of China, India, US, UK, as well as Eurozone. Shifting focus back home. When it comes to corporate action, well, today is the first of the month, so you're going to get a whole host of auto sales numbers today. All auto companies will be declaring their auto sales for the months that went by. Also, another stock that will be in focus today is TCS, because its share buyback is going to open today, so keep an eye out on that counter as well. And well, GNFC buyback will also open today via tender offer. So, well, GNFC also in focus. And of course, now with all the action that we're getting in the primary market, we do have one more listing today, and that's going to be Flair Writing Industries. Let's see how that debuts on the bourses, Lisa.
Right, but now let's move on to some global stories, onto some somber news coming in from the Israel-Hamas war update. Truce deal sees the light of extension just minutes before the expiry. The pause is now on its 7th day as Egyptian and Qatari negotiators, they work towards extending the pause for an additional 2 days. US Secretary of State Antony Blinken, who met with the Israeli leaders and the president of the Palestinian Authority, said that the truce had helped get more aid into Gaza. Now, 8 more hostages were released from Gaza and 30 Palestinians were freed from Israeli jails.
Absolutely, and shifting focus to China, then McKinsey has come out with a bearish view on China's consumption patterns. In its report, McKinsey says that the Chinese consumer is not going to spend thrift anytime soon, which means companies need to come up with a plan to tap what is a huge market. The report rates that the market sees no signs of a strong V-shaped recovery. Do remember, tepid retail sales have weighed on China since the pandemic, and despite the end of the COVID curbs, the country has not witnessed a handsome recovery yet.
And Tesla's long-delayed unconventional Cybertruck will be priced starting at $60,990, which is over 50% more than what CEO Musk had touted in 2019. The truck, according to Musk, is more utility than a truck and is faster than a sports car.
Well, and the much-awaited Cop28 negotiations have opened in Dubai with a landmark deal on loss and damage fund, an operationalized fund that would help compensate vulnerable countries coping with loss and damage caused by climate change.
And shifting focus on the macro front, India's GDP growth that soared to a robust 7.6% in July-September quarter. Now, that surpassed the expectations and outperforming forecast by economists as well as RBI. Now, the unexpected surge that was fueled by a remarkable upswing in the manufacturing as well as the construction sectors, with manufacturing a gross value that added spiked to 13.9%, up from the 4.7% in the previous quarter. So here's what we got from the Chief Economic Advisor V.A. Nageswaram.
In terms of recovery in rural demand, after staging a slight recovery in Q4 of FY23, it has continued in Q1 and Q2 of the current financial year as well. So by and large, the picture of rural demand is that it is steady, even if it is not spectacular. Net FPI flows compared to the previous financial year have turned positive in a very big way. Tax buoyancy, if you look at the combined indirect and direct taxes collection, that the buoyancy is close to 2, or that we are probably still underestimating our GDP growth and economic activity. The focus on capital expenditure leading to improved quality of spending is very obvious. Both states and the union government have upped their capital spending. Last year's surge was much higher, but this year's surge is no less impressive compared to historical trends.
Well, that's the word coming in from the CEA, but let's keep on talking about data then, because in October, India's 8 core industries showed significant growth of 12.1%, up from 8.1% in September. Now, this surge was mainly driven by increased production in cement as well as electricity, and notably cement production rose by 17.1% and electricity generation doubled more than 20.3% compared to the previous year. Overall, the output of these core sectors for April to October was 8.6% higher on a year-on-year basis, reflecting a positive trend in India's industrial growth.
And the fiscal deficit for the period of April to October, that has come in at 8.04 lakh crore, which is 45% of the FY24 target. Now, the fiscal deficit at this level, that is higher than 7.57 lakh crore that we saw in the same period last year. Meanwhile, the revenue gap, that has lowered to 2.79 lakh crore versus 3.84 lakh crore on a year-on-year basis.
Well, and brokerages note that India's July to September GDP growth has come in higher than what was estimated, and some believe that this could make a case for revising the FY24 GDP growth estimates higher. So Gaurav is joining in with the highlights of all of their notes this morning. Good morning, Gaurav. Take it away.
Yeah, good morning. So, yeah, right, as you said, that GDP growth has come up at 7.6% YOY growth, which was actually higher than what the street was expecting, and it was also higher than what the RBI had estimated at 6.5% growth. So, on this, now brokerages have also come up with the estimates raised for FY24 growth of GDP. So, let's talk about Nomura. Nomura has raised the FY24 GDP estimates to 6.7% from their previous estimate of 5.9%, while they are still expecting some kind of slowdown, and they're expecting the growth to remain at 5.6% in FY25. But in this quarter, they believe that the government has driven the growth, while private sector has taken actually back seat during the quarter ended September 23. The next one we have is SSBC. They also believe that the growth was actually stronger than what the street was estimating, and industry growth was actually stronger than the services. At the same time, urban growth was actually stronger than the rural growth, according to HSBC. They believe that going ahead, weak FDI inflows, a likely softness in the credit growth, and normalizing base effect could be the factors which could drag this kind of growth going ahead. The next we have is BOFA, and they have also raised their FY24 GDP estimates, growth estimates by 20 bips to 6.5% YOY. They believe that September quarter saw actually GDP to GVA ratio, which was actually on a softer note, and going ahead again, they believe that the government consumption, capital formation and exports growth actually offset the drag that was seen because of the private consumption and higher imports in this quarter. So it seems that all the brokerages are actually bullish on the GDP growth for India.
Thank you, Gaurav, for sharing the brokerage's view on the GDP growth, strong GDP growth coming in for India. But let's shift focus on the political front. Voting season ends for the year as the nation gears up for the big results ahead of the Lok Sabha polls. BJP maintains edge in Madhya Pradesh as well as Rajasthan, Telangana as well as Chhattisgarh in Congress' favor. Padmaja Joshi joins in with the latest takeaways on this. What do they mean, Padmaja, on this? Why is the Congress losing out?
Pretty much fall into the pattern of what Times Now had been speaking about. For example, there were very many factors which were at play over the last few months. Number one, there was a lot of polarization that took place in several parts, especially in terms of what happened to Kanhaiya Lal, that happened in Udaipur. That particular seat, which now falls in the Mewar region, takes about 40 seats to the state assembly. In that area, there was a lot of polarization. Then you have the area of Rajasthan that borders Haryana. That also has seen sporadic incidents of violence. There is a lot of cow smuggling that takes place over there. There was the murder of Nasir and Junaid. Then you have got the areas which are, say, Tonk and Dausa. Those are also areas which had in the past seen some clashes which took place because of cow smuggling. So there is polarization there. Those are the regions where the BJP has made substantial gains according to the exit poll numbers that have come out. The other factor in addition to that was the communal violence that took place. For example, the Karoli riots. So you have the beheading of Kanhaiya Lal in Udaipur, you have the Karoli riots, you have got the cases of cow smuggling and the subsequent clashes that took place. The second factor which dented the Congress in Rajasthan is the perceived fight that took place between Sachin Pilot and Ashok Gehlot. Everyone knows about the rebellion that was engineered by Sachin Pilot. Eventually, there was an effort by the Congress to show that everything was fine, the differences had been papered over. To be fair, even Sachin Pilot himself came out and said that, well, let bygones be bygones, now we are working together. Rahul Gandhi at the airport said, hum sab saath saath milke kaam kar rahe hain, hum sab saath saath hai. But there were certain things which perhaps could not that easily be forgotten, especially among the Gujar community, which is what Sachin Pilot represents. Of course,
well, Padmaja, thanks for that roundup. That's on Rajasthan's exit polls. But when we look at Madhya Pradesh, Padmaja, you've got the Congress and BJP going very neck to neck. So what's it going to be like for Madhya Pradesh?
As far as Madhya Pradesh is concerned, there are some things that both the BJP and the Congress have in common, and that is the reason why this is extremely neck and neck. Now, there are rebels within the BJP. There are rebels within the Congress. The BJP, remember, had fielded its members of parliament, its general secretaries. In fact, it was the first state where it announced its this model where it said that we are going to send in our members of parliament to contest the assembly elections. In addition to that, some of them were ministers. There was one general secretary, which is Kailash Vijayvargiya. Now, the idea was that you are going to throw in your might, and this was done region-wise. So if you had Prahlad Patel, who was in the Mahakaushal region, then you had Kailash Vijayvargiya, who was put in Malwa Nimad. So they would not only win the seats where they are contesting, but they would also pull the votes around that. So that was the BJP's damage control. But what that did do is that led to some disgruntlement, where people who were either sitting MLAs or they were waiting in the wings, they just felt that they had been shortchanged. So that was some level of rebellion over there. The side of the Congress was, and which the BJP tried to drum up, where they said that, oh, you know, there are differences between Kamal Nath and Digvijay Singh. There was a viral video where you know, Kamal Nath was heard telling a supporter कि भाई अगर आपको टिकट नहीं मिला आप जाकर के उनके कपड़े फाड़ो, where he was referring to Digvijay Singh and his son.
Right, but Telangana was the real surprise of this election. Why is that so?
Absolutely, Telangana definitely is the story of this election, and that is because it is not just a anti-BRS wave that seems to have swept across the state if the numbers actually translate into actual results on the 3rd of December, but it's also the Congress on the back of their win in Karnataka, capitalizing on that same formula of 6 guarantees, of having the local leadership, you know, take the lead, but also striking an emotional chord, capitalizing on the weaknesses of their opposition. So they've got that formula together from Karnataka. They have done scientific ticket distribution. They have tried to see where are the areas where the BRS is weak, and they have managed to pull together that campaign. So the Congress's resurgence in Telangana is definitely a big story. It is going to change their standing very much in the India alliance. They are definitely now in a position,
All right, Padmaja, thanks for those exit poll highlights that we've received just yesterday from the 5 states that have elections going on right now. Well, the vote counting is going to be on Sunday, and we do have special coverage for that, so stay tuned to ET Now as well. But with that, we'll slip into a very short break. When we return, we'll look at how the Asian markets have opened up, so stay tuned.
Welcome back to the show, and now moving on to an ET Now news which has been confirmed. SAIC Motor, which is MG Motor India owned company, as well as JSW Group, they have announced a strategic joint venture, and that is to accelerate growth with focus on green mobility. Now JSW will hold 35% in this joint venture. So we will see going forward on this. What is the deal on this? They will be holding 35% stake in the Indian joint ventures, and SAIC will be supporting the JV with advanced technology. Snehi?
Well, and the winter schedule always sees higher airfare, but this year the fares are 20 to 30% higher on most routes as compared to last year. Now, ET Now's analysis says new passenger records and a big gap between the demand and supply have aggravated the prices. My colleague Samir Dikshit has more details on this chill that airfares are seeing. Samir, take it away.
The Indian aviation sector is currently going through an exciting time. There are some record numbers that have been registered, the domestic passengers or the international passengers, but there are a couple of challenges which are being faced by the airlines. Now, the important aspect is of airfares. As compared to last year, this year the average airfare on important or on the busy route has gone up by more than 15 to 20%, whether it be Delhi, Chennai, Delhi, Mumbai, Delhi, Kolkata. So the average airfare currently is more than rupees 5,000, which clearly shows that as compared to last year, it has gone by more than 15 to 20%. Now, despite the higher airfares, there is a huge demand. If we see the passenger number in the month of November, on 23rd November, record 4.6 lakh passengers were carried by airlines at domestic sector. 18th, 19th and 20th November, record numbers were registered. More than 4.5 lakh passengers were carried. International route as well. More than 1 lakh passenger was carried by the international airline on a single day. So these are numbers which shows that there is a huge demand, but the airlines are facing a big challenge, and that is related to the supply chain issue. More than 100 aircraft of various airlines, it is currently grounded. Not just this, the aviation consultancy firm Cop28 has suggested that that by the year end, March 2024, more than 200 aircraft will be grounded. For example, Indigo alone, currently around 50 aircraft, it has grounded. Go First, it has shut operation. 54 aircraft of Go First, it is on ground. So there is a big challenge of supply chain issue, and because of which we also see that demand is high, supply chain is there a big problem, and yes, it is resulting in a higher airfare side as well.
Thank you, Samir, for sharing your perspective on the airfare hikes. But it's raining exclusives, and in another exclusive conversation with ET Now, Steel Secretary Nagendra Nath Sinha talked about the rising steel production in the country and also the goal to introduce the green hydrogen as a component of steel manufacturing. Well, let's listen into a bite of the conversation that we had.
Steel industry in India is growing very rapidly, and at this moment, if you ask me of the total volume of production, it's about 125 million tons, whereas the capacity is about 162 million tons. And the way it's growing and the rate at which it is growing, it should reach us something like 250 million tons of consumption, about 300 million tons of capacity by 2030. We are competent in manufacturing almost all grades of steel that the Indian economy for domestic consumption and export requires. We were looking at the data of the proportion of the steel that you import as that of total consumption, and I think it has been progressively coming down, and it's less than 5% now.
Also, when we talk about the focus on made in India, so how is the steel industry focusing on more and more products being made in India and also exported with the made in India tag?
More than 95% of the steel consumed in India comes from Indian steel makers. Two different producers are innovating with different grades and trying to provide steel to different manufacturers, including the auto sector, which is quite demanding and which is often changing the grade of the steel as the requirement evolve. And what is now coming as a hindrance is the fact that the foreign automakers take a lot of time in validation and approval of the steel manufactured by the.
Well, that's the word coming in from the Steel Secretary. But despite rising global prices of steel and aluminium, domestic prices have been muted this year on the back of subdued demand. Are price hikes by steel mills on the cards, and how is the demand and supply dynamics playing out? Ashesha is joining in with the analysis. Ashesha, take it away. Well, yes, first up, let's talk about steel, where domestic steel prices have remained subdued despite the surge in global steel prices. Domestic steel prices in the last 1 month have declined by as much as 3% on a month-on-month basis, and domestic steel prices currently hover at about 55,000 rupees per ton. Remember, this is despite the surge in global steel prices. For instance, Chinese steel prices have risen by as much as 2%, and they currently stand at about $575 per ton. Meanwhile, same is the case with spreads as well. Domestic spreads have seen a decline at a time when Chinese spreads are on a rise. Domestic spreads, for instance, have declined by as much as 2.5% on a week-on-week basis at a time when Chinese spreads are on a rise. Chinese spot spreads have risen by about 7% on a week-on-week basis. Analysts, as a result, believe that perhaps domestic steel prices could rise from here on. One of the reasons, of course, is the rise in coking coal prices that we have seen over the last 1 month. Coking coal prices have risen by as much as 21% on a quarter-on-quarter basis, and that could also probably lead to an increase in domestic steel prices. Meanwhile, let's also talk about aluminium. Remember, aluminium prices have largely remained flat. On a year-to-date basis, aluminium prices have declined by as much as 3%. So domestic and global aluminium prices continue to remain flat. Let's also talk about aluminium demand then. Aluminium demand continues to remain soft. Remember, consumption growth in China of aluminium is offset by contraction that we have seen in the rest of the world. Analysts believe that aluminium prices will not recover till the fourth quarter of FY24 or by FY25. So near-term outlook for aluminium as of now looks muted.
Well, thank you, Ashesha, for taking us through the trends of both steel as well as aluminium. So keep a watch on these on these two metal counters. So now let's shift, we will move on to a short break, but stay tuned as we discuss more stock specific news and action on the other side of the break.
Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. Now, the auto sector is in focus on the back of the upcoming November auto sales. Shrishti is here to take us through all of that and what we can expect from the auto sales in the month that went by. Shrishti, take it away.
So definitely the festive season sales has done pretty well. There has been a strong festive season where two-wheelers happen to grow more than double in terms of, if we see the 67-day festive period, then the growth that we have seen in the two-wheeler segment is almost double what we have seen in the passenger vehicle segment, and that's what the similar reaction we are seeing in the auto stocks as well, where two-wheelers have grown around 18% and the passenger vehicle has grown 8% on a YOY basis in the festive season. But let's talk about the big trends that is shaping up in the segmental performance. Then for two-wheeler, we are expecting that the post-festive season sale has been quite strong. Not just that the festives were quite supportive, even that the dealers are showing some momentums because on the back of the wedding season sale as well as the recovery in the rural demand. Other than that, in the passenger vehicle, the discounts for the entry-level cars have been higher but negligible for the SUV segment, which tells you that the demand is still there. But some of the reports are suggesting that going ahead in 2024, there could be some moderation in the passenger vehicle sales. Coming to the tractor division, that has not done well because the benefits of the government-led subsidies are reducing, coupled with a slowdown in the overall demand. While for commercial vehicle segment, though this time we can see a decline on a month-on-month basis as well. But going ahead in the next year, the dealers are quite optimistic because there is an anticipation of the increase in the freight rates in January that should help the demand further. But let's talk numbers then. Firstly, the passenger vehicle segment, we are expecting almost a double-digit growth when it comes to Maruti as well as M&M. We are expecting a 12 to 26% growth on a YOY basis, while for Tata Motors passenger vehicle segment, the expectation is 48,608 units. Coming to the commercial vehicle segment, we are expecting largely a single-digit decline in terms of the sequential growth when it comes to Eicher Motors, VECV, Tata Motors, Ashok Leyland. The sales is expected to be just almost flat or a mild moderation on that front. But from the two-wheeler, if we see the YY sales data, all these companies will show you stellar results, and that's on the back of a strong festive in the month of November. Lastly, from the tractor division, all eyes will be on M&M tractors, where we are expecting close to 35,000 of units in the month of sales, while for escorts, the expectation is close to 9,000 of units, but not much expectation. But like we have been highlighting, that the two-wheelers could continue to surprise on the positive. So this time we have already seen some of the reports suggesting that, so all eyes on the two-wheeler segment.
Thank you, Srishri, for taking us through the auto preview numbers. So all eyes will be on the auto stocks today, but which are the other stocks that can be potential buzzers? Vamakshi is here to take us through that list of the stocks. Vamakshi?
Yes, let me first start off with Protein Tech. Now, this newly listed player disclosed its Q2 earnings. We saw a sequential jump of almost 7% as far as the revenue is concerned. Even the EBITDA has come in nearly 7% higher sequentially. Now, keep in mind that the EBITDA margin, however, has come in flat at 15.5%, and adjusted net profit has actually come in at almost 33 odd crores. Now, this again is flat on a sequential basis. But nevertheless, the numbers were above what the street was expecting, and that is the reason you should keep an eye out on this counter. Apart from that, also keep an eye out on SIS Limited. The board approved the proposal for buyback via the tender route. Not just that, the buyback is priced at 550 rupees per share, which implies a 13% premium. Apart from that, the record date is also set at December 12. ITD Cementation is the next stock on our radar, and that is because the company has secured a hydel power contract for almost 1,000 odd crores in Andhra Pradesh. HG Infra is also in focus because the company has received 1,303 crore order from NHAI. And lastly, also focus on Sonata Software, and that is because a bonus equity share has been announced. They have been announced in the ratio of 1:1. So largely keep an eye out on all of these counters.
All right, Vamakshi, thanks for taking us through all of that as well. Also, please take us through all the stocks that brokerages are keeping on their radar this morning.
Well, yes, let me first start off with Bajaj Auto. We have some management commentary coming in through from the CLSA conference, and in fact, they have highlighted that the company is becoming quite aggressive in the electric two-wheeler space. They are planning to launch low-priced models. Exports are also improving steadily, and in fact, strong festive season has helped lower dealer inventory. So on the back of this commentary that has come in from Bajaj Auto as well as the auto sales numbers, keep an eye out on this counter. Apart from that, keep an eye out on New India Assurance. We have a note coming in from JP Morgan, and in fact the management call that was recently held confirmed that there are limited upside catalysts for underwriting performance and the pricing outlook. Return on equity in the last 3 years has been in the range of 1 to 5%, which in turn indicates that the capital allocation remains inefficient. In fact, going ahead, JP Morgan has maintained an underweight rating on New India Assurance with a target price of 90 rupees per share. Lastly, let's also focus in on LTI Mindtree. We have a note coming in from Macquarie. They believe that the company could increase its cross-selling as well as increase the number of services used by a single client to 5 to 6 as compared to 2 to 3 currently. Manufacturing, energy, travel and insurance segments have done very well for the company, and in fact they are evaluating an M&A option, and that could actually be an option for the vertical as it is currently small. So all in all, on the back of all of those factors, keep an eye out on LTI Mindtree because Macquarie has maintained an outperform rating.
Vamakshi will definitely keep an eye on all those stocks highlighted by the brokerages. But with that, it's a wrap on this edition of Market Cafe. But stay tuned on the channel as we take all the action on the market.